Africa's industrial engine is at a crossroads. South Africa, long the continent's manufacturing powerhouse, now faces a bold challenger from the north, Morocco. Morocco is rapidly transforming, staging an industrial revolution that's shaking up Africa's economic landscape. This is more than rivalry. It's a battle between two economic models, each vying to become Africa's gateway for global manufacturing. The automotive sector is the main battleground. South Africa's legacy is strong, but Morocco's export-focused machine is catching up fast. Morocco's rise raises a crucial question. Can South Africa's legacy withstand a nimble, future-focused competitor? Both nations are betting billions on their strategies, with the outcome set to reshape Africa's role in the global supply chain. As we dive in, we'll explore the strengths, strategies, and ambitions fueling this high-stakes industrial duel. South Africa's automotive industry has long been a pillar of its economy, employing over 110,000 people and exporting $15 billion in vehicles and components annually. Global giants like Ford, Toyota, and BMW have deep roots here, making South Africa a trusted manufacturing hub. But the industry faces mounting pressure. Local assembly of complete vehicles has dropped from 56% to 33% in 2 decades, while imports surge. This shift threatens to hollow out the sector, risking deindustrialization. Industry leaders warn that without urgent government action, especially on electric vehicles, South Africa could lose its top spot to Morocco as soon as 2025. The stakes are high. Jobs, economic stability, and the country's industrial future hang in the balance. South Africa stands at a crossroads, forced to defend its legacy against both internal decline and Morocco's rapid ascent. The next moves will determine whether it remains Africa's industrial heavyweight. While South Africa defends its legacy, Morocco has surged ahead, officially surpassing South Africa in car export value in 2024. Morocco's annual car production now exceeds 700,000 units, driven by a clear focus on exports and next-generation vehicles. The country has attracted global giants like Renault, Stellantis, and BYD, making it a hub for electric vehicle manufacturing. Morocco's government has played a central role, offering incentives, building world-class industrial zones, and investing in workforce training. This proactive approach has transformed Morocco into Africa's leading automotive exporter, with vehicles flowing tariff-free to Europe. The sector now outpaces traditional industries like phosphates and agriculture, fueled by relentless demand from Europe. Morocco's export-driven model stands in sharp contrast to South Africa's more balanced approach. The result, Morocco is now the continent's automotive export king. South Africa isn't standing still. In 2025, it launched a $10 billion reindustrialization plan to modernize its economy and embrace green technology. The plan targets 3 pillars: green energy, electric vehicles, and green steel. Massive investments in renewables aim to power factories sustainably and attract investors seeking low-carbon supply chains. Incentives are pushing automakers to shift to electric vehicle production, ensuring South Africa stays relevant as global markets go electric. The steel industry is set for a green revival, focusing on renewable-powered production for high-demand sectors like wind turbines and EVs. By linking these pillars, South Africa hopes to create a synergistic, future-proof industrial ecosystem. The message is clear. South Africa is betting big on a green industrial revolution. The success of this plan will determine if it can reclaim its industrial edge. Morocco's industrial rise is built on 3 powerful advantages: deep EU trade integration, geographic proximity, and a green energy vision. Tariff-free access to Europe gives Moroccan manufacturers a huge edge, making the country an ideal nearshoring location for European firms. Just 14 kilometers from Spain, Morocco offers ultra-efficient logistics. Goods reach Europe in hours, not weeks. This proximity slashes costs and enables just-in-time manufacturing, critical for the fast-paced auto industry. Morocco's aggressive push for renewables, targeting 70% green electricity by 2030, makes it a magnet for companies seeking sustainable supply chains. Billions invested in solar and wind have created a clean energy grid that attracts global automakers and component suppliers. Early investments by Renault and Stellantis triggered a wave of new entrants, including Chinese EV makers. The result, a dense, competitive ecosystem that keeps Morocco ahead. Morocco's edge isn't just one factor, it's the synergy of trade, location, and green power. This formula has made it Africa's most attractive manufacturing destination. South Africa's strengths are different but formidable: vast mineral wealth, a large domestic market, and global alliances. The country is a top producer of platinum and manganese, key minerals for batteries and hydrogen fuel cells, making it central to the green economy. Its domestic market, with over 60 million people, provides stability and demand. Unlike Morocco's export-heavy model, South Africa still leads in new vehicle sales across Africa, offering manufacturers a reliable customer base. Strategic alliances, especially through BRICS, open doors to fast-growing markets and investment from China and India. Recent upgrades by BAIC and Mahindra show the benefits of these partnerships, moving from assembly to full-scale manufacturing. South Africa positions itself as a gateway to Africa and a partner for emerging economies. The challenge: turning mineral wealth into advanced industries and leveraging alliances to modernize its industrial base. If successful, South Africa could redefine its role in the global supply chain. The contest between South Africa and Morocco is a real-world test of two industrial strategies. Morocco's top-down, export-driven model delivers rapid results, but its reliance on Europe is a potential risk. South Africa's diversified, market-driven approach offers resilience, with mineral wealth and a large domestic market as buffers. World Bank forecasts show Morocco's industrial sector growing at 7.1% annually through 2030, outpacing South Africa's 3.9%. For now, Morocco has the momentum, rapid growth, export dominance, and a clear green vision. But South Africa's scale, resources, and continental reach make it a giant that can't be ignored. The real winner may be the model that proves most sustainable and resilient. As these titans compete, Africa as a whole rises on the global manufacturing stage. The question remains: will speed and focus win out, or will scale and diversity prevail? The answer will shape Africa's industrial future for decades to come. Which path do you think will ultimately lead?